everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings. Today we're diving into a Schedule 14A filing, which is basically a proxy statement. Think of it as a company asking its shareholders to vote on some important stuff, which in this case might include a stock split. Let's see if we can figure out what this all means and what's the story behind the numbers. Scroll Scout 1414 Escrow Glucotrack Incorporated's proxy statement for their annual stockholder meeting. It outlines what the meeting is about, who gets to vote, and what the board recommends you vote for. It's dated April 18, 2025, so this is all happening next month. Scroll Subject Connotation. Dated April 18, 2025, scroll peg. A key point right up front is this statement saying subject to completion. That means this is a preliminary proxy statement. Things could change before the final version is sent out. Keep that in mind. The meeting itself will be held on May 2010, 2025. Shareholders can attend virtually, which is increasingly common these days. The first thing on the agenda is electing directors. Shareholders get to vote on who will sit on the company's board. The proxy statement gives you information on each person nominated. Next, there's a proposal for a reverse stock split. Basically, the company wants the option to combine a certain number of existing shares into one new share. This is often done to increase the stock price. Scroll to increase the aggregate number of shares of common stock available for SUs under the 2024 plan. Scroll then. They want to increase the number of shares available under their equity incentive plan. This is the pool of shares used to reward employees and executives with stock options and other equity-based compensation. Scroll our key board of directors. The board has fixed the close of business on April 21, 2025. If you own shares on that date, you're eligible to vote at the annual meeting. Scroll Andrew Kaka, bulk roll there. Let's take a quick look at the director nominees. Andrew Ballo has a strong background in clinical and regulatory affairs. Scroll Victoria Carbrendel. Scroll Victoria Carbrendel is also nominated. She brings expertise in medical device development, commercial execution and intellectual property. Scroll Erin Kakata. Scroll Kakata has extensive experience in executive finance, especially in the medical device industry. Scroll Paul Kidovi. Good PH scroll. Paul Good is the current CEO and has a long history in medical devices. Scroll Leska Malave. Scroll and Luis Malave has experience in the medtech industry, specifically in diabetes management. Scroll Tudik Suplo. Committee scroll to the proxy statement also describes the different board committees like the audit committee, which is responsible for overseeing the company's financial reporting and internal controls. Scroll Compensation Committee, which sets the pay for the CEO and other executives. And a Nominating and Corporate Governance Committee, which identifies and recommends potential directors. Another proposal is to ratify the appointment of Farn Canna as the company's independent auditor. The company paid Farn Canna $113,152 thus for audit services in 2024 compared to $145,000 in 2023. Audit-related fees were about $71,000 in 2024, up from $0 the previous year. Scroll conrational for the reverse stock split scroll. Let's get to the reverse stock split proposal, which is usually a sign of struggling performance. The document mentions the possibility of being delisted from NASDAQ if they don't maintain a certain stock price. Basically, the board thinks a reverse split is needed to keep the stock listed on the NASDAQ. This is because NASDAQ requires a minimum share price, and a reverse split increases that price by reducing the number of outstanding shares. The proxy statement also touches on the tax implications of a reverse stock split. It notes that the split should be a recapitalization for tax purposes, meaning shareholders shouldn't recognize a gain or loss. Scroll COA Compensation Plan intros. Next up, we'll examine the Equity Compensation Plan proposal. This section talks about increasing the number of shares available for issuance under the company's equity incentive plan. Scroll up to 23. 19 shares of our common stock may be issued. Scroll. Currently, they have around 20,000 shares available. However, the approval is to increase this up to 7,500,000 shares. Scroll Annual Cal. Limitation on awards to non-employee directors. Scroll. There's a limit on how much non-employee testers can receive in awards. $750,000 for the first year and $500,000 every year after. Looking at the outstanding equity awards, we see that CEO Paul Good has options to buy 3,277 shares at an exercise price of $49 per share. Here are the financial tables. For the year 2024, CEO Paul Good's salary was $350,000 with no bonus. For compensation actually paid to Paul Good in 2024, it totals $349,643. In 2023, compensation was $25,000. The document also mentions that non-employee directors are compensated with cash and stock. Alright, now let's check out who owns the company, at least in a large amount. John Ballantyne Rev Trust owns 3,117 14,1745 shares, making up nearly 12% of the company. Paul Good, on the other hand, only owns 27,662 shares, representing less than 1% of the company. Scroll Turing Tech 2024 and 2023, we were not a participant in any transaction. Scroll. The company states that its audit committee reviews and approves all related party transactions, which are dealings with officers, directors, or major shareholders. Finally, the document ends with questions and answers about the annual meeting. These are designed to help you better understand it all, where you will find the times, locations, virtual that is, and deadlines for the actual meeting and the proxy statements. So what's the big picture here? Glucotrack is at a crossroads. They need to maintain their Nasdaq listing, which is why they're proposing a reverse stock split. They're also trying to incentivize their team with equity, hoping to drive future growth. But the reliance on a reverse stock split is a red flag, indicating potential struggles with maintaining a healthy share price. It's a gamble. Will it work? Or is it just a temporary fix? Glucotrack's strategy seems reasonable given their circumstances. They are focused on maintaining their listing and incentivizing their staff. However, as the saying goes, you can bring a horse to water, but you can't make it drink. There are outside market forces that Glucotrack can't control, so if investor sentiments are negative in the future, they might have to resort to further such strategies. Overall, Glucotrack's current trajectory is uncertain. They are facing some financial and market challenges and are clearly trying to course correct with a few of these big changes. Whether they can successfully navigate these issues remains to be seen. Thanks for watching. If you found this breakdown helpful, be sure to like, comment, and subscribe for more corporate deep dives. Let me know in the comments which company you'd like me to decode next.